What's up, military millionaires? We have another exciting episode this evening, and we are bringing in Alex Brashears to talk about private lending, private money, limited partnerships, and everything that goes into lending money. So, as a lot of you know, private money gets touted a lot as, oh, just go find a private lender to fund your deal. And that's all well and good, except they're not always as easy to find, and you don't always know how to structure them. And there's a whole lot of question marks after that statement gets said. And Alex and I were on the phone the other day, and I was like, wow, you know what you're talking about. And you've built a community, the Private Lending Lessons Facebook group, which I actually just invited a friend to today because I think it's a very useful platform for asking those questions. And she basically, well, I'll let her tell all of it, but we had a good talk. And I was like, wow, yeah, let's get her on the show. So this is going to be a good time. And also because I don't know. I didn't say anything about him. Alex Felice is here. He's still the co-host, and you should hopefully have heard enough of these episodes that you know that. But I should give him an intro anyway. So I need to get better at that. We're gonna perfect that part eventually. Welcome to the Military Millionaire Podcast, where we teach service members, veterans, and their families how to build wealth through personal finance, entrepreneurship, and real estate investing. I'm your host, David Perret, and together with my co-host, Alex Felice, we're here to be your no BS guides along the most important mission you'll ever embark on, your finances.
Vehicle 1, you're clear to depart friendly lines.
Roger, Vic 1, Oscar Mike. Alex, without a beard, welcome to the show, and tell us a little bit about yourself.
Thank you, David. I am a military spouse for the last 20 years. My spouse is an active duty service member in the Navy. And in that time frame, we've moved 19 times. I'm currently sitting in my 19th address in 20 years. So as you can imagine, having any sort of, meaningful career or doing anything, job-wise becomes very difficult as it is in a lot of military spouses. It's just career is non-existent. And we used to actually invest as active investors. Various places we were stationed around the country. We bought some rentals. We did a couple fix and flips and quickly discovered that was not us. I call it real estate hazing or newbie real estate hazing, where if someone says you're interested in real estate investing, there's normally only two options that are presented to them. They're either going to be a buy and hold investor and be a landlord, or they're going to be a fix and flip investor and they're going to put farmhouse sinks into ugly houses. And there's never like any other options ever presented. They're like, here, if you're a real estate investor, this is what you do. And of course, we fell into that early on and we're like, okay, let's go, be a landlord and have passive, quote unquote, passive income as a landlord. For people that are landlords, it's not necessarily all that passive. We did the fix and flips to, get capital to buy the quote unquote passive rental. So we feel like we did a lot of the typical textbook active investor things early on. And just with the military lifestyle and constantly moving and trying to be a landlord from 2,000 miles away, and even with property managers, we were miserable. The happiest day of our rentals was the day we sold them, to be honest. The last time we had a rental was over 15 years ago, and we vowed we would never do it again. So after that, we kind of stepped away from real estate because, again, the only options we had kind of been fed was, you're going to be a buy and hold investor or a fix and flipper. And we had tried both of those and just didn't enjoy it at all. And I worked as a hard money loan broker, early on in my kind of real estate endeavor while I was going through undergraduate school. And the guy basically just came up to me at a RIA and he's like, oh, I hear you're a STEM major, because I was a chemistry major. And I was like, yeah. And he goes, well, you must be good with numbers. And I'm like, yeah, I'm pretty decent with numbers. I can run a calculator. And, he said, well, I'm looking for someone to kind of help run my office and do loans and all this, and kind of explained what was involved. And I'm like, oh yeah, flexible hours as a college student, I'm there, let's do that. And it just kind of took off. And running his back office, I got to see, kind of the cash flow through the projects. They would come from his lending business, to the rehabbers. The payments were coming in from the rehabbers and the payoffs and all of this. And I was just like, okay, in Florida, hurricane hit, mortgage still has to get paid. Contractors ran off the job, mortgage still has to get paid. Tenants didn't pay the rent, mortgage still has to get paid. I'm like, I think I need to be on that side of the equation. After being a landlord and fix and flipper, I'm like, the mortgage side makes more sense. So after we bought our home, we live in Hampton Roads now. And after we bought our home, it was finally just kind of time to say, okay, it's time to step foot back into the real estate investing arena. And we decided to do that kind of by accident. I feel like serendipity kind of steps into your life occasionally. And we just happened to meet another active duty service member because, I mean, it's Norfolk. You can't throw a rock and not hit 5 people affiliated with the military in some fashion here. And he just turned out to be the exact borrower. He had the exact property. It happened during the very beginning stages of COVID when the hard money lenders just kind of shut their doors and said, we're not funding anything, have a nice day. And it left a lot of investors in the lurch. They were banking on having this closing. He was banking on having a closing the end of March. And that's when the hard money lenders literally just shut their doors 4 days before his closing. So we kind of stepped in and said, well, if we were going to get back into investing, this is how we would do it. And, with the help of attorneys and getting everything set up, we were ready to fund the loan about 2 weeks later and closed on our first loan. And then we were like, okay, you're just kind of sitting in the bag, like at the end of Finding Nemo. They managed to go through this entire adventure to get to the ocean, and then they're just sitting in their little plastic bag. And you're like, all right, now what do we do? The benefit of being a passive investor is you're passive, but I'm stuck inside as an extrovert during COVID. Once your capital's deployed in a couple of loans, you're just kind of getting weekly text message updates. Here's the project, here's what's going on, tiles installed, cabinets are installed, like, okay, great. So I actually went looking for community. It's one of my gifts. I love people. I love talking to people. And like you mentioned in the intro, we take the private part very seriously as private lenders. We are fantastic at hide and seek because even I couldn't find us. And, and at that point I was in the ranks. I couldn't find him. Every private money group I joined was very much just kind of a place for scammers, hard money lenders to kind of, basically spam out their programs, their terms, their brokers. Nothing was discussion based. Nothing was conversational. Nothing was informational. And I'm like, all right, if I can't find a tribe, I'll build one and start helping other people learn how to do this, because I feel like this is a viable option that should be presented to more investors early on. Instead of just fix and flip and buy and hold, you can be a part of a team that's doing the fixing and flipping and buying and holding, but maybe this suits your personality, your strengths, your time commitments better than those other two options.
That is.
Why this over over something long-term, reliable, lower? I mean, fix and flip, hard money. Essentially, what you're doing. I mean, it's private money, but it's hard money. I mean, it's inherently high risk. That's why it's hard. So
I would say usually we are into the house no more than about 65% of the after repair value. So our equity position in the property is usually very, very good. If we do any sort of second lien position, we did do a second lien position on one property. He took the first lien subject to, but I mean, the first lien was only at like 40% of the after repair value, really didn't need a whole lot of rehab. He just needed about $30,000 to kind of literally throw in some paint, carpet, flooring, and update the kitchen a little bit. So even at that one, the combined loan to value is about 130, and he sold that one for 265, 3 months after he closed to borrow the money.
Are you taking rates or are you taking a split?
We are entirely on the debt side of the equation. So we are doing points and interest rate.
Okay. The biggest question, I mean, my question stands. Why would you do this over, I mean, from your personality, it seems like you like it.
Yes. It's a lot of fun. It's a lot of fun for me. This is, if anything, I feel like this is a little safer for our particular investment goals. If we just wanted to park money somewhere in a mortgage that was, say 5 years, 10 years, whatever it is, even if you could get something that would be quote unquote competitive for a longer rate, competitive for the lender, not from the borrower's perspective, say 7-8% interest rate, if you're locked into that for, 5 years, 10 years, whatever that is, you slowly have inflation eating away every year at your 5, 6, 7, 8%, whatever it is. Whereas if you're constantly recycling that money, that velocity, I don't know if you're familiar with the velocity of money, but you're increasing that velocity of money, being able to loan out the money, every 4 months, every 6 months, every 8 months. You can get a couple origination points every 4 months or 6 months or 8 months. So I mean, that's really what it kind of boils down to. But it's also, if we are at the top of a market, if we do have some sort of impending crash coming, some of the talking heads are saying, if you're in a property 5, 7, 8, 9, 10 years, if you're in there at a little higher LTV and that crash does happen, there's no incentive for the borrower to perform on the note because they're essentially underwater. Whereas in this case, you have so much equity in the deal that they have money tied up in the deal because it's a refund draw model. They have money that they've put in to close because we do a certain percentage of loan to close. So they have a lot more incentive to perform.
I like it. So what is, do you have like an ideal, in a perfect world, your go-to structure? What would it look, what are you looking for? Like, I mean, I'd be just curious on like points, percentage, length of loan, like what is your ideal? And then I'd kind of like to talk about how you can tweak those numbers to make a deal work.
So I would say ideal is kind of hard because every deal is just so completely different. We generally do not do loans over 12 months because they're designed to be exclusively for fix and flips. That's what we're funding. So if you are really holding on to a fix and flip longer than maybe 6, 8 months, we have other problems because holding costs and whatever else is probably eating you alive, and especially if it tends to be a relatively thin deal. So I would say no longer, holding times of no longer than maybe 8 months, 9 months. I know some borrowers are having problems during COVID with supply chain issues, borrowers waiting a couple months to have windows put in, and getting appliances seems to be a common problem, at least here for, some of the fix and flip investors that I know of. They're waiting a couple months to get entire kitchen appliance packages. So we're trying to keep that in mind with a little bit longer hold time on our loans, but I would say no longer than 12 months. We traditionally do not charge origination points up front because what we do is we do a shorter loan time, but we charge a flat interest rate as opposed to an annualized interest rate. So if they have the loan for 6 months, say that a lot of our loans are 6 months, if they have the loan for 6 months, it's a 10% flat interest rate. And that just keeps everything easy, accounting wise. And then if they're experienced enough or have enough assets on hand, we actually will offer to roll that entire loan, that interest payment into the payoff of the loan when they go to sell it. So realistically, they don't even really aren't making an interest payment. And it's really about, the nice thing about private lending is you don't have to go and check all those boxes that an institutional lender might want. We have the flexibility to go, I understand in the fix and flip model, it's a massive outlay of cash at the very beginning. So it's not in the borrower's best interest to outlay more cash for interest only payments that we're going to get anyway when they go to sell the property. So it's one of those things where you can kind of give and take and work with the borrower, work with the deal, and see what meets everybody's needs.
I did private money for my fix and flips last year, and that was the big reason I paid probably more than I have to my investors. I like my investors. I want them to make money, so they give me a lot more. So I don't mind that, but that was the one caveat. I'm like, and I don't do, my relationship is a little bit more, I know these people very well. Mm-hmm. So the one thing I said to them, I said, look, I want all the money up front. I don't want draws. I want it all up front, but these people know me. And the second one is, I'm not giving you anything every month. You're out of your mind. You're going to give me the money, then I'm going to give you your money back. That doesn't make any sense. Now I understand why the hard money institutional, I'm going to use the term institutional hard money lenders.
Yes.
Do so, but I do know that there's I know some other lenders that have meant that that's a point of contention and a kind of it's like, why are you paying out a monthly payment for a 6-month loan? If this thing goes south, those 5 payments aren't helping you out anyway, and they're only going to hurt the flipper.
Right, exactly. So, I mean, there's that fine line between you want to make a return on the money because that's obviously why we're investing, but at the same time, you want to set everyone up for success because it's in my best interest that the loan performs. It's in the borrower's best interest that the loan performs. It's that end retail buyer's best interest that the home gets rehabbed, put on the market and sold, especially nowadays since inventory is so low. So everybody's kind of got the same goals aligned in that particular model.
Yeah, I love that. I often tell people that that's one of the huge advantages of, if somebody's loaning to you out of a self-directed IRA is that they don't even, they don't need the money. There's nothing they can do with the money. So they're not going to be able to touch the money, even if you gave it to them. So a lot of times it's very easy sell to be like, hey, look, I'll just give you everything at the end, one big check. Don't have to keep track of payments, whatever. But I find, like you said, Alex, with hard money lenders, that's not usually the case. And a lot of private money lenders kind of like to do things traditionally because they're used to mortgage, monthly payments, whatever. But that's gold. If you're lending to a fix and flip investor and you can understand, like, look, if I get $500 a month for 6 months, or they give me 6,000 at the end of that 6 months, doesn't make it. That was terrible math. 3,000. You guys know what I meant. Marine over here. I don't know
Bro,
what's
he does
going
math on this show in his head every episode. And every episode, he ruins it.
Whoa, it was spot on last episode. Thank you very much. And I caught it and fixed myself. The point
I
being,
think it would be amazing. I think it would be amazing if we could get a big chunk of our listeners to all mail you calculators.
A calculator.
For Christmas. Christmas is coming up. We're going to mail you a bunch of calculators. That's going to be amazing. Listeners, go to David's website, find some. Do you have some place we can send you stuff?
I look forward
Post
to
that.
the look
I'll
on
send
your
you a bunch
face
of
that
stuff.
says,
I
I'm
mean,
an
I mean-
asshole when you see what I got you for Christmas.
I'm going to get you a big prop calculator.
I'm just going to send you the boxes of what I got you for Christmas now, and I'm going to keep it. We'll play this game. So the point being that it really doesn't make any difference because you're getting the same amount of money, whether you get it up front. I mean, if they were to re-lend that money right away, okay, but nobody's re-lending $500. I mean,
No.
maybe they, bank it on some Pokemon cards or some Tesla stock. You couldn't even buy a Tesla stock right now for that because it's overpriced. But anyway, you know what I mean? So I think that's gold for fix and flip is it makes their life way easier because they're not having to worry about payments. And B, yeah, they need the money at the time. So yeah, I think that's awesome.
Yeah, I mean, like I said, it's really, I enjoy it from the collaborative aspect. Because one thing I didn't like about being a landlord, and I feel like this especially been exacerbated with COVID-19 is, there's that whole eviction moratorium and the rent cancellations, and the rich landlords are kicking out the working poor class that lost their jobs in the whole 9 yards. And so the goals tend not to be aligned. The tenant wants to pay as little as possible for a mansion, and the landlord wants to provide something that's reasonable, but obviously collect as much revenue as possible. And those two things end up causing a lot of friction and butting heads. Whereas, when I'm working with an active investor, like I mentioned, we still have the same goals. We're just on opposite sides of the table. So it's in our best interest to work together.
That sounds good, but historically, banks have been hated on almost as much as landlords in history. So, landlords are definitely in the sour right now, but
Yeah.
you'll have your moment. You'll have your moment too.
I agree. I'm not saying we're not completely culpable as a group, but and I mean it's on the small side. I think having that flexibility of being smaller and not having that institutional tie allows us that collaborative process.
Yeah, I do like, especially like small scale is perfect example because you guys are like, we both have skin in the game. We both we have to have, this has to work out because this is your money and their money. The bank, they're like, from a banker's perspective, literally at the bank, they're like, look, if some of these loans don't default, we weren't trying hard enough. So everybody who's going to big banks, like, I'm gonna get the bank approved me. It's like, bro, some of these gonna have to fail. Otherwise, so just so you know how I think there's a big difference. There's no way, Alex, that I can imagine that you're ever gonna have a business model where you're like, some of these have to default, so we know we're pushing hard enough. That's never, ever, ever gonna happen.
Yeah,
So.
no, absolutely correct.
Oh man. All right. So I'm Nick, the new guy, and I posted online that I want to know how to get started in real estate and I have no money. And someone told me private lending. How do I make myself appeal to anybody who would even think about giving me money if I don't have a track record? Like what are some things you think could make somebody competitive or at least worth looking at? Because obviously if the new guy doesn't have a whole lot of experience and saying, hey, you want to give me 100K is so I'm curious on if you have any thoughts on that.
I get that question quite a bit. And I would say the number one thing would be to partner with someone or have some sort of mentor that can walk you through your first deal. Because when I talk to a lot of fix and flippers, especially experienced one, they'll tell you like, if you break even on your first fix and flip, like that you did a good job, because you tend to be very, estimating your construction costs, maybe your holding times. You start opening walls and you're like, wait a minute, I didn't know all this was in there. You start digging up piping, and so your construction goes over budget. You usually go through at least 2 or 3 contractors. I feel like that's just a rite of passage, and they're going to run off with your deposit that you gave them all entirely up front. So that's going to make your construction run over. So yeah, I mean, it happens. It's a story. It happens all the time. So that's why I say, because people will go and say, I don't want to partner with someone. I don't want to give them half the deal. And it's like, well, I'm thinking you having half a positive outtake of this entire thing is better than you having a negative outtake of nothing. So I would say,
especially if you lose.
Yeah, I mean, if you can,
I would have much rather only lost 15K instead of 30 on my first flip.
Right. So if you can partner with someone, or at least have some sort of, maybe official mentor, relationship arrangement agreement, something like a mastermind like that you do, that you can go to this quote unquote board of advisors and say, hey, look, I'm stuck on this. I don't know how to approach this. Because realistically, as a private lender, what we are buying, what we are funding is not necessarily a property at the end of the day. That legally might be what we're doing, but we're funding our faith in you to execute a business plan that you have sold us. And so in order to do that, that's why everybody stresses the track record, because we want to see that you've bumped into the walls, you've overcome these challenges. You didn't just walk away and go, oh, I guess that was a bad deal, I'm done. You guys, you lender people, take that back. That you had the guts to stick in the game when things go wrong. And it's not a matter of if things go wrong, it's really when things go wrong when you're talking about fix and flips. So I would say partnering with someone that's more experienced would be my first step. If that's not a possibility, if you're just adamant you want to lone wolf it, then worked with some sort of mentor mastermind group. Just buying a course off the internet, and not talking to anyone is not really going to do you very many favors, because real estate is very much a relationship business, and that one-on-one back and forth, being able to ask questions in real time, I feel like is just absolutely invaluable, especially the first couple times you go through any sort of investing.
But Alex, I watched the whole first season of HGTV. I've got this.
Right. And the other scary thing is a lot of the new people that do not have that sort of support will be the ones that get into the thin deals, the most riskiest deals. They're buying this property that needs, massive amount of overhaul, made in the 1900s, all old plumbing, plaster walls, the whole 9 yards. And they're buying it 80% after repair value because the wholesaler told them some inflated ARV, told them, oh, it only needs paint and carpet, and it's $20,000 worth of rehab. And then when you really get looking at it, you're like, yeah, no, you're buying it at 80% of ARV, and it's going to need more like 80, just to get it somewhere where it's going to be decent to retail to a home buyer. And I've run across that a little bit more than I'd like with new investors, especially since COVID's become a thing, just because inventory has been just so historically low. Even properties that need work are going on MLS and selling for over asking, sometimes well over asking. And you're just looking at it like, what numbers are you looking at? Are you smoking something? Like that's not really, and I get a little annoyed. People call everything a deal. It's like, oh, I got this contract. It's a great deal. And I'm like, it might be a deal, but it's not a deal for you. It's that situation. So I really feel it's crucial to have someone. There are some, hard money lenders, private money lenders that will work with newer investors and do a little bit more of the hand holding. They usually want to be on the debt and the equity side of the equation. So they will be that person to kind of walk you through the experience. And obviously you're going to be taking a hit on the percentage of ownership, percentage of the cut, whatever you're taking, but that education you're getting in real time is very often well worth it.
So I had a hard time with partners when I was new, because maybe not that I wanted to, I wasn't so much that I was greedy and I wanted to take the whole deal. It's that I was too afraid to let anybody see how stupid I was. Right. But that is a very, very common problem. A lot of people start off and like, I want to do it myself. We have a friend in our mastermind that he won't do deals with partners at all. He's like, every time I see the deal, I'm like, I can do it myself and get the whole nut. And it's very limiting. It's very incredibly limiting. And most beginners go through it. And since I've been working with partners a lot over the last 2 years, and it's so there's just so many lessons to learn by having people around that will take some of the work off your back And the other thing is the greed about like, oh, I want to take the whole deal. It's like the first one, it's like college. Like
Yeah.
don't worry about making money. Just if you can make money, if somebody else can do all the work and you can make 10% of it, if somebody else can help you or whatever, if you do half the work and make 10%, it's like, bro, you got paid to learn how to do this. And once you know how to do it once, you kind of know how to do it. And you 100% will get ripped off by contractors for sure. I still do. I had a guy on my last flip. I paid him $7,000 for some work. He did a good job. And then he came back and he was thirsty. And I could tell he was desperate. I don't know what was going on in his life, but he's like, I need this additional job I had posted on Facebook. I was like, I need somebody to do this. He's like, I can do that. I'm like, you can't do that. I could tell he was thirsty. He talked me into it. I gave him $7,000 on for the work for this one house. He came back and he did another $2,500 job. I paid him half up front. He took the money and ran.
Oh.
And I'm like, it will happen to you. If you don't think a guy who just did $7,000 worth of work and did a good job and then rips you off for $1,200, 3 weeks later, if you're new, it will happen. You better get ready. So I love that advice. But look, it's different because you're a girl. Guys, too much ego, way too much ego.
Well, I would say women, if anything, have a harder time because we are in the minority when it comes to real estate ownership. There's a lot of people talk about the income gap between men and women. The wealth gap is probably 3 times larger than the income gap because we just often don't have the assets. We don't have the time. You know, if we're working full time and then juggling a full household and a lot of the kid care and the whole 9 yards, you know, you don't have time to be an active investor. You don't have time to go out there and scout for deals and run numbers and deal with contractors, you know, and that's what it is. And that's why I really like private lending because it tends to be a little work heavy up front, you know, doing the due diligence on the borrower, doing due diligence on the property. But once you've kind of cleared those hurdles, it's pretty set it and forget it. You know, it's just go out, make the money work for you. And then when it comes back home, turn it around and roll with it. And if you get the same kind of pool investors, you know, I usually work with 3 or 4 of the same investors in my market. You know, because we've done a couple deals together, I've seen other deals that they've done. I don't really need to do a whole lot of due diligence on them. You know, I'm comfortable with them. I'm familiar with them. We've closed deals. We've had a successful track record with them. It's really just looking at the property at that point. So it even becomes less time intensive as time goes on.
Yeah. And, you know, seems like you're a heavy extrovert. You said you love people. So this definitely suits you. And coming from a lending background, for anybody who doesn't know, the 5 C's of credit is staple underwriting. The first one, and it's not as important, I guess, now as it was probably 20 years ago due to FICO and whatnot, but the first one is character. And even in banking, right? It's like, yeah, I can go through your financials and I don't want to get too far in the weeds here, but when it's a Freddie or Fannie Mac deal and somebody goes to get a mortgage and it's a underwriting matrix and they're like, look, you got to have this score, this income, you fit the box, the government underwrites it. Nobody cares. Nobody cares who you are. Like you meet the requirements to move on. That's not how banking really works, right? When a bank actually hands out their money out, they're like, who are you? Who are you, Dave? Are you gonna be able to do this? Do you have what it takes as a human being to take this on? I don't care if your credit score is good. I'm looking at you, I'm sniffing you. And so it seems like this is your strong suit is people. And so I love that you found this little you underwrite, and that's exactly it. You're underwriting the people.
Yeah. And I tell people, I've held seminars in the group, you know, putting together like your real estate resume and how to approach private lenders. And I tell people all the time, like 2 very, very simple things that take less than 5 minutes to accomplish both is one of them is make an email address that looks professional. I literally got a whole entire loan package from someone at onehotcookie@AOL.com. Like I didn't even know AOL was still around. So first off, that means you don't keep up with the time. Second off, you couldn't be bothered to take 30 seconds to make even a basic Gmail address for your company. You know, and then the other one is make a professional Facebook profile. And that's the one that will do anything real estate related. Because the first thing I'm going to go do is I'm going to go Facebook stalk you. And if you have, you know, a ton of, you know, Italian cars and guys waving cash and, you know, talking about, you know, jewelry and this and that and shoes, and that's not the type of person I want to work with. That's someone that's not spending money wisely, in my opinion. So nice. That's why I would say.
Can you do me a favor?
He's like, oh no.
We're done. I want you to go to my and And I want you to see if you would lend to me.
I mean, it's just one of those things, like you go back to, the 5 C's of lending. People, I'm investing in people, and people only invest with people that they know, like, and trust. And factors that I trust are people that have a heart of service, that they have some level of commitment to getting the job done, that they have some level of resilience. Those sorts of traits are not generally found in people that are running around waving cash on Facebook and, showing off their fancy new cars and things like that. Like, if that's all your Facebook profile feed is, you're not my borrower.
I just bought a new car.
Oh man. Yeah.
No. So look, I'm an anomaly, but this is really good advice. So for listeners, Alex is a lender. I was in lending. What she's saying is really, really important. Like, how you portray yourself. Like, people judge books by covers. I don't know what to tell you.
Yeah.
Like, and it should be both. You don't want to fake it and pretend to be responsible. You want to be a good steward of the project at hand, and then you want to outwardly convey that to the internet. Dude, email addresses, that's a ridiculous, like, I can't believe you even say that. That's a really short barrier to
Yes.
to overcome.
Yes.
And what I really recommend for people is get their own website. Get your own website, because that's really what tells people this is what I want the world to see.
Yeah, I mean,
so that's really good advice.
I'd liken it to, you're going to talk to your boss, or at least you should be. You're going to talk to your boss different than you're going to talk to your buddies. And it's not that one is incongruent to the other. It's just you're in a different environment. And until we're buddy and until I'm going to your house to have barbecues, I would personally like to see a little bit of professionalism from someone at least at the very beginning. Like, my borrowers now, like, we text daily and we're sharing pictures. Like, they all have children. I do not have children, but they like to harass me because I don't like children. So they'll send me, like, what they say are cute photos of children. And, it's just, we're friends now. So at this point, the relationship has been built and when we're good, but I don't want that from the very beginning. And I especially don't want to work with people that have an AOL email address that's onehotcookie@aol.com. Like, that just blew my mind. I was like, no, because I'm a firm believer that how you do anything is how you do everything. So if they couldn't take 30 seconds to just make themselves, TH home buyers or whatever they were at gmail.com, something just super simple, what else are they missing? I guarantee you their scope of work is probably off. Their ARV numbers are probably off because they probably didn't spend enough time or any sort of analysis into it because they couldn't spend 30 seconds to make themselves look professional.
Yeah, I agree. I mean, even if it was just your name at gmail.com, right? Like, that's
Yes.
something. And I would just piggyback off that and say that, take the 2 minutes to put some kind of a signature on the bottom of your email too. Like, once you create whatever that website is, throw it underneath your name, your email, or your name, your cell phone, your, like, a little business card, maybe 2 seconds about what you do, and hyperlink to your website. And then, for one, for anyone listening to this, for the one, that looks somewhat professional and somewhat credible. For two, you will get people to your website, even if you're not talking about lending, from that email address, which is nice. So win-win. Are we getting a share screen? What's going on over here? Alex blacked out. Oh no. All right. So we lost the other Alex. Oh, there he is.
Oh, there he is.
So anyway, what I like the number side. Like, I like the idea of factoring present value of money and discounted notes and stuff. And I think a lot of that kind of coincides with seller financing, but it can be done with private lending too. Just curious, do you see a lot of similarities between, so with seller financing, you can do some weird, like, some crazy stuff, right? Like, I had a guy who I was able to be like, hey, instead of paying you for one payment a month for 12 months, how about I give you 11 months or 10 months upfront on January 1st, and we're done for the year. And I've seen people do that. So there's some fluctuation. Obviously, that's not what you're looking for on more the hard money side for flip. But do you see people who are willing to do that in the private money space, or what kind of things are you? I guess what kind of, I don't want to say tricks of the trade, but like, how do you find the best return for what you're doing?
I would
That's
say
a
it
very
really,
depends question, but
yeah, it
probably-
really does. Because it's going to vary with loan amount. So for example, if you're loaning out $30,000, like I did in that second lien position, if you're just doing 1% interest, for the 6 months, that's not even really worth my time. That's what, maybe $1,800. So at that point, it's like I've put out $30,000 kind of at risk being in second lien for $1,800. That's really not a return. So when you kind of talk to investors, it's about setting a realistic expectation and just explaining to them, this is the first time we've worked together. The loan is going to be in a second lien position. Yes, there's a ton of equity, but these are the problems I'm seeing, and this is what I would like to do to mitigate the risk. It's about being transparent. So when you're talking to them, another private lender friend of mine, I really like the way he phrases it when he does these lower dollar amount loans, is he says, okay, if I'm going to lay out this $30,000, if you were in the position of laying out $30,000, would $1,800 would that make you excited about the deal? Would that make you want to do the deal? And most of the time the answer is like, no, not really. And they're okay, well, what number would make you excited about the deal? And they're like, oh, well, maybe 3,000. And they're like, okay, well, that sounds more reasonable, and we'll work with that. So again, it goes back to that collaborative effort. And that particular investor, he has loans that are 17,000, 27,000. That's kind of his bread and butter, is working in that smaller loan amount just because of the market he operates in. And I found that to be just a really good solution for working with investors. It's not so much just a flat across the board fee, because nobody likes being pegged into that little box. They like to feel like they have a voice in the conversation, and that allows them to have a voice in the conversation and kind of meet everybody halfway. So I would say on that front, it's really about meeting what the problem is, what their pain point is. So for example, when we talked about the fix and flip model, it's very cash intensive up front. So what can I do to alleviate that pain point, but still make a return for me, or make a return for investors that I'm placing funds for? And if it boils down to timing, okay, we have flexibility to play with the timing. We can do that, and maybe we'll do, 12% flat instead of 10% flat because we're waiting 6 months or 9 months or a year to get all of our money. I'm okay with that because, it's a little bit higher rate because it's a little bit higher risk. We're not getting our money for 12 months instead of 6 months. So those are kind of some of the things. As far as mitigating risk, I've seen all kinds of things. I heard one private lender required the borrower to front load the entire rehab money up front to close the deal. And then they basically got draws of their own money back in construction. I still have yet to figure out how that worked. I've heard of refundable origination points. So one private lender would charge somebody like 10 origination points, but then once the deal was closed and the loan was paid back, they would get back a certain number of those origination points, kind of as like incentive, carrot to, you'll get your money back in 90 days, 180 days, whenever you actually close and pay us back. So it really comes down to, like I said, what the pain points are and trying to solve the problem that's at hand.
What's up, military millionaires? I wanted to briefly talk about a service I offer that a whole lot of people don't seem to know about, and I guess that's a failure on my part for not having discussed it enough. So look, finding a realtor that understands investing and or the VA loan or both is not always the easiest thing in the world. And finding a lender, same thing. So what I have started doing is I've built I have a large network, but I've started to compile it all together finally as a legitimate Excel document driven, location driven list for you guys, essentially. So what it is basically just my way of helping connect you with a realtor or a lender that I know personally and have vetted and talked to and understand that they're not going to screw you. And what I do is, like, for example, I had a market where I had 2 or 3 agents that I all sent the same person as a connection and said, hey man, I trust, I know all of these, let me know what you think. And they all said the same agent and same thing. So what I've done is if there's multiple agents in the same market, I choose the best one, and that's who I'm going to hook you up with. But the whole point of this is just to help ensure that you get connected to the best agent. So if that is something that you would like, just go to the website, go to FromMilitaryToMillionaire.com/VA-Realtor/ or just reach out to me on Instagram or Facebook, whatever. I'll send you the link, or you can find it on the resources page of the website. But look, all it is a way to help connect you with an agent who's going to hook you up. No, I don't charge a fee for you. No, I don't charge a fee for the agent. it's just a way to hook you guys up. At the end of the day, as a buyer, you're not going to pay for a realtor anyway. So, ta-da, it's magic. You might as well use one. As far as VA lender, I've got a really good one that I work with and know very well. There's several others that are pretty good, and I'll probably try to steer you away from some companies that I just don't think are very reputable or have been very helpful. So, if this is a service that sounds good to you for free 99, then reach out. And if not, then enjoy the show right now. Thank you for saving my terrible question. You know where I was going. It was just worded too broad a question.
So if I could, I'd like to, it's really important, especially when for our new listeners that are trying to do this, and they're, what happens, I think, is they're like, well, I wanted this flip, but I have no money. And so they get desperate because they're like, well, why would anybody give me any money? Which is the correct question. But they don't really stop to ask, well, what's the lender want? Because, I try to explain this to people. I'm like, look, if that lender's going to put up 80% of the deal, like, you're the partner. It's their deal, right? They're the buyer. You're along for the ride more than anything. And so people don't really look at lending people as partners. They just look at it as, oh, the bank, or, oh, the lender. It's like, dude, this guy, they have wants and needs too. And not all banks are the same. Not all hard money lenders are the same. And obviously you gave some really great examples of things I hadn't even heard of, actually. Really front loading points is actually really clever. Kind of like a pawn. You're kind of like, I kind of want to use myself as an example. Like, I will pay a really high equity split for my investors, way higher than I have to, but I want terms, and my terms are like, you're going to pay for 100. I don't want to come out of pocket anything. Right. And I'm not going to give you any draw payments, and I'm not going to give you any, it's like, you're going to give me all the money. And then when it sells, you'll get your cut, which will be big. Now, I can't do that. Not everybody's you wouldn't do that with a stranger, but these aren't strangers. And that's but my point, I guess, is kind of what you're saying is like, dude, people with their private money are infinitely flexible. And so what you said was, I love, which is like, find out what the lender really wants. Now, if you have a lender who's like a hard money institutional, again, I'll use that term in quotes, institutional hard money lender, they're not going to be that flexible, especially if you've never done a deal. But a lot of people will, and they'll be like, well, this is what I really need. And you can move risk around in a lot of different ways as well. Low LTVs, all sorts of things. I thought it was really interesting. You said did you end up taking a second position? That's astounding to me.
Yes, I did. Like I said, this was an investor that I was comfortable with. The deal had tons and tons of equity. It was not a major, like, literally it was under construction like 3 weeks, and then it was back on MLS, within that time frame. So in that case, it's one of those things, like, there were the other factors in the deal made it worth the effort and time to do that deal.
Yeah, a second position is not certain. I mean, people do it every day, so it is rarer for hard or private money. Obviously, I assume, the deal must have been. I mean, it makes sense in plenty of situations, but again, it's one of those things where it's again a new person. I should probably explain it. A second position. If you're the first person, you own the deed, the bank, they have first position. That means if you default, they get paid first. If you're second, it literally means after everything is defaulted, closed out, and the first person gets paid off, assuming they get fully paid, whatever's left goes to second position. Yeah. Which is, again, it's one of those things where it's like, hey, the risk has to be really low, because if that has to go to second position, we'll call it lost.
Yeah, absolutely. And I mean, that's one of the things I see more and more the newer investors wanting. They'll say, oh, I've got a hard money loan, and they require me to put 10% down, and they want me to have, $20,000 in liquid assets, in order to get construction going and hold. So I need a private money lender. I'm like, no, that's not how this works at all. First off, a lot of hard money lenders won't accept a second position. They don't want a subordinate lien on the property because they intentionally want you to have some money in the game. So it's probably not even allowed, I would say, the vast majority of the time. And it goes back to, there's just not a lot of education on private lending. Bigger Pockets has great books about how to be a landlord, how to estimate rehab costs, how to do fix and flips, all sorts of things. Even note investing. They got a book for note investing, but there is not a book on Bigger Pockets about private lending. The only way it's mentioned in private lending is go find a private lender to fund your deals, but nobody talks about what the cash flow through that deal looks like. I routinely get private messages that ask me, what's my interest rate? Like, wait, what? That's not a question. For example, most private lenders only lend in their local market or a specific market. So I only lend in Hampton Roads, Virginia. So is your property in Hampton Roads, Virginia? No, it's in Idaho. Okay, well then we don't need to have this conversation. The interest rate is completely null and void here. So, it's really, I would say, if you're trying to find private lenders to work with, do not start with the question, what are your interest rates? Because there's so many factors and so many other things to the loan other than interest rate that we are going to take into consideration.
Well, that's because I imagine that's because, as I alluded to earlier, is the overwhelming process that people go through with loans is they go to a bank and they say, I want to get a mortgage.
Mm-hmm.
It's underwritten by Freddie Mac. So they're just selling a product that they don't even own. They're a broker for somebody else's, you know how I get about brokers, David. And so they're like, well, we'll just sell Fannie Mae's loan. And Fannie Mae says, if you fit this box, you're good. And so all they care about is the rate because the terms are fixed and the terms are well known. 30 years, it's fixed, done, simple. And it's and so people go, that's what banks do. And I'm like, that is not what banks do. That ain't even close. That's one bank product in the entire banking industry. That's one bank product. And people go, that's what banks do. And I'm like, so yeah, I just love this. I love lending. So I love this conversation. And I think it would behoove people very well to learn how things work. They just go, well, what's my down payment? And okay, go to private loan for that. I'm like, you have no idea what you're asking right now.
Yeah.
It's not
I mean, that's really why in the Facebook group, we didn't limit it to just people that are doing private lending. We opened it up to active investors because a lot of times active investors are also doing some private lending as a side hustle, but also it's education for active investors that's not really out there for active investors. And, they are able to kind of take a peek behind the curtains and watch conversations that private lenders are having with each other. What concerns us? What do we do? What are some of the options? So those active investors are available to that read those conversations that private lenders are having with each other. And I feel like that's gold. You start learning the lingo, you start learning what we can do to mitigate our risk, what our attitude is worth, working with and collaborating with active investors, what markets we're in, what we've done before, the types of deals we fund. So, I mean, I feel like that level of education is invaluable for active investors, which is why the group is open to active investors in the first place.
Yeah, it's like all things sales, right? So recruiting duty, they talk about needs and motivators, consultative selling. And so you're not going around and saying, hey, how much do you want for that house? You're figuring out why they need to offload the house, right? What's the story? Maybe they need 10 grand in cash to move and they don't care if they pay 0 interest on the home, or maybe they need, whatever. It's the same thing with a lender, right? Like they're not just you're not going to find an actual private lender, someone who actually does private lending. You might find like a mom and pop who has some money in a self-directed IRA or whatever, and doesn't know what they're doing with it. Might be a little bit less sophisticated, but somebody who actually does lending is not going to give you 2.25% for,
30 years.
Super risky. Like that's not it. You're not shopping rates. You're figuring out what do you need, because you're giving me a lot of money, which I didn't have the personal finance or what, like my situation does not allow me to have this much money. I need your money. So what's in it for you? Right. And I think that's people get wrapped in when the problem with the advice of go find a private lender is people think of like, well, I've got this awesome thing and the lender's going to get maybe. Right. But it's got to be worth their time. Yeah. No lender right now is going to give you 3% interest without any idea what the, market's going to look like in 6 months. Right. So
the government does 3% interest, bro.
It's government backed. Right. But you didn't qualify for that debt or you wouldn't be having a conversation with a private lender. So, yeah, I mean, hopefully,
people
right.
If you in terms of, they don't take the time to think about the risk that they're asking. That really is what it is. Like, what is
absolutely.
And then also, I love David said that. He goes, well, I have this great deal. It's like, yeah, but the lender's only going to make a rate. They're not going to make the equity that you're going to make in this great deal. So it's not.
Maybe
it's
you
not
offer the equity play, right? Like maybe that's part of it, depending on, you got to make it worth their time. And that's the bottom line. It's everybody wants to know how to get a mentor. Well, go add value. Well, it's the same thing for anything you do in life. It needs to be about the value for everybody involved.
Absolutely. And it's, real estate is very much a relationship business. Like you can get somewhere to a certain degree if you're burning bridges and, screwing people over, and you might get ahead in that one deal or a couple deals. But I feel like in any market, no matter how big your market is, your name will eventually get around. And then because one of the things I do as a private lender is I contact 3 of your professional references that you gave me. And everybody's like, oh, it's fine. You know, I'll give you my cousin, my coworker and whatnot. And I'll say all these great things. But then I'm going to go and ask them for other people that have worked with you. And it's usually that second ring of people where you start getting the real truth of, you know, what happens when the nuts and bolts start coming off the buggy. Like, how far did you roll when certain things went wrong? And those sorts of stories make their way around any sort of real estate community. Like, we might be socially distant right now, but I guarantee you that does not stop people from spreading gossip and letting everybody know who the problem child is in any particular market. So that's why I say err on the side of caution. You know, do your first couple deals with a partner, that's somebody that you trust. And on the, you know, on the note of partners, do that same due diligence on them as if you were a lender. You know, make sure they are legit and that they are capable of doing, that they have the track record. And then basically you're buying into that. You know, you're piggybacking on their track record.
Yeah, Alex, I want to do a deal with you so bad, just so I can see if I would pass your due diligence.
He's like,
I went to a lunch once just to prove your point, and there's all kinds of stories like this. But I went to a lunch once. I was in town very briefly. I had not a whole lot of time, not a whole lot of days. So I was like, let me just grab a couple investors that I know and I'll just slam them all together into a lunch. And, you know, they're all local, so they'll get to network together. It'll be beneficial for everyone. And lunch was great. Everyone was, you know, whatever. 30 minutes after lunch, phone rings. And my buddy's just like, hey, I saw so-and-so. I saw you talking to so-and-so. You need to know this.
Yep.
Right. And I was like, oh, thank God. Like, oh my goodness, you know, dodged a bullet. Right. Because in that situation, it was essentially, well, nobody knows what I'm talking about. So not too many details, but essentially the warning was so-and-so's a predatory lender. Like, you're going to get screwed if you go into if you borrow any kind of money. That dude is not looking for good, mutually beneficial deals. He's looking to get the house. I'm like, oh, well, it's good to know. Thanks. I appreciate that. Like,
yeah.
You know, and maybe there's always two sides to every coin, but yeah, it'll get around. Right. And so you don't want to burn that. I guarantee Alex is not going to recommend that contractor who ripped him off unless you suck. Right. Unless he really dislikes you. He's not going to recommend
I got
you
a
that
guy
contractor.
For you.
So, yeah.
So, I mean, that's why I say, you know, whatever you're trying to do, just have more of an abundance mindset, a collaborative mindset, and that's going to get you further in life than anything. I know a lot of people tout, you know, hustle, you know, stay up till 10 o'clock at night after you've been at work all day, and that's what really makes it. And I'm like, that might be a case to a certain degree, but I think what really makes it is when you become part of a team that everybody has that mindset where they're ready to pitch in, they're ready to jump in, they're ready to be collaborative, they're ready to help. Because you're going to get farther on a team. If you want to do any sort of scaling in real estate, you're going to have to bring team members on board, you know, whether that's to buy, you know, more than 6, you know, fix and flips in a year, you want to do 12. Well, you know, where are you going to get that extra manpower, capital, and time? A partner, you know, whether it's syndication, you know, you're not going to take down a $4 million apartment complex on your own, chances are. You know, how are you going to do that? You're going to bring, you know, 4 other GPs on the team. They're going to bring their limited partners to the team. And, you know, that's just what happens in real estate. It's a very collaborative team sport. So I think the sooner you can embrace that concept of an abundance mindset, a collaborative mindset, I think that's probably the first thing to do when you're a new investor in general, is just walk into every situation with that mindset.
I'm going through my second apartment deal, first big syndication. $3 and a little bit $1 million deal, and four GPs, just like you just said. And it's going to be 20 plus LPs. And I couldn't have done this 4 years ago when I had very much smaller experience with partners. And so kind of to piggyback on what you're saying, like, not only do you get better at working with partners, you get better at it. And then, like, you know, people want to work with you more if you do good business. So, I highly recommend it, because now this is going to be one of my best deals. This is probably going to be my best deal yet. And it takes, you know, a freaking village to take this thing down. And I couldn't do it without people. And those are long relationships that I built, a lot of them in many ways, and in many cases. And I just love that. Yeah, people. This is a good episode, man. We're talking positive about people and banking. This is right up my alley.
He's like, I'm there.
Lending,
and
not banking.
You bring up a very good point. Like, the time to start looking and talking to private lenders is well before you have a deal under contract. It's not a situation where if you call up a hard money loan broker and they can have you funded by next Friday. It's do we have the capital available? Do we have a loan coming back in to then disperse funds back out in the timeline you need? So it's very much a relationship model with most of the private lenders that I know. They want to know you. They want to see what you're doing for a couple months. They want to be friends with you on Facebook. Again, going back to the Facebook feed thing. They want to get a sense of who you are before they could decide to wire $120,000 to your closing company and pray you're a good steward of it. So the time to really start talking and networking with private lenders or looking for private lenders is well before you have a deal. And then to that front, if you find one that you really want to work with, just straight up ask them, what market do you lend in? What type of deals do you want to lend on? What sort of LTV would you be comfortable lending with? And then go find deals like that. And I guarantee you they will fund them, because they've given you their playbook, and nowhere in there did you ask what the interest rate was. You just said, tell me what you need. I will fill that need for you and put your money to work in a safe manner according to what you just told me you wanted.
Yeah, I love it.
100%.
All right. So we got a few questions we ask every guest. The first one is, if an E1, E2 or 18-year-old was to walk up to you asking for advice, right? And I guess in this scenario, it would be advice on private lending. What would be the one thing that you would tell them? What do you wish you'd known?
About private lending? Well, I would tell them about real estate investing in general. My number one takeaway would be there are more than just fix and flip and buy and hold as far as real estate investing goes. I feel like that's newbie real estate hazing. It's almost like when they put the rolls and the fried rice at the beginning of the buffet line and you fill up your plate because you're super hungry and it sounds great. But then once you're past that, you see that the shrimp and the crab legs are at the end of the buffet line. But you have to get through all that other kind of cheaper food, to get to the crab and the shrimp. So I feel like it's almost like a rite of passage that nobody really presents these options to you. And to that token, no one's having the conversation with a new investor. What strengths do you have? What weaknesses do you have? What sort of, capital as far as time, human capital and actual financial capital do you have to deploy? Because even when we talked about masterminds and mentors earlier, a lot of times they end up in these masterminds and these mentor groups after they've decided what type of investing they want to pursue. And it might be because, hey, my buddy bought a rental and it's going great, but they never really thought about, does rental fit my real estate goals? Does rental fit my personalities? Does rental fit my human capital, my time capital, things like that? So by the time they get to a mentor, they might be the greatest mentor ever for the BRRRR strategy, but nobody's having a conversation with that new investor to say, is the BRRRR strategy really where you need to be? Is it really where you want to be? Is it really where you should be? So I would say early on, have the conversation with yourself, with your mentor, with somebody, and just have an open mind to other strategies of investing and really do some research on the options before you really nail down what you want to invest with.
Yeah, to push back on that a little bit, right? Didn't you start with rentals?
I did, and I was miserable.
But my point, right? My point is like you start off with some people. I like the advice. I think is sound, but it's very hard to implement, right? Because somebody's going to come in and they're going to be like me. Like, I'm not going to buy another single family house. I'm going to do multifamily. I'm going to do big syndication. And it's like, but I couldn't have started with that. I had to figure it out in single families, and you had to figure it out in single families too. So there is a scalability of your talents. But I do agree. Yeah, it's like some people. I'm way better. Turns out I'm going to be way better at raising money than I am at actually. I'm not, bro. Don't let me manage a property. Don't. Like I kind of fall in the same boat as you. You're like, I love people, but I don't want tenants. Like I just
no. I mean, I was routinely let down because I expected adults to act like adults, and every single time I was just routinely let down between tenants and contractors. And I was like, I don't have children. I don't like children. I don't want to babysit other human beings. And that's literally what being a tenant and a fix and flipper was babysitting other human beings. And it drove me crazy.
I guess she got mad there for a second, David. Didn't
you have no idea.
I feel it. I've
got some tenant doozy stories. Like so we had horse property, and we were renting out horse property because the Navy moved us last minute because his orders got pulled. And the people, when they left, they literally took all the wood from the fencing and the side of the barn with them, and then had the audacity to text us 6 months later and saying that they were going to take us to court to get their security deposit back when they owed us like $20,000 worth of wood because they had taken literally all the wood on the property. That's just one of the many. It was just insane. I was just like, really?
Yeah, I just had one of those. It's fun. They're like, yeah, so we're not going to send you the court-ordered amount of money we owe you in back paid rent after the eviction until you give us your security deposit. Like,
That's
I
not how
don't
this
think you
works.
get that back since you owe me like $3,000. Yeah, but we want it back before we give you the $3,000. All right, we'll just take you back to court, I guess. Like, it's not how this works. You destroyed the house. Cost almost $10,000 to renovate the house, and we had to evict you for 2 months. So not getting the deposit back, buddy. Sorry. It ain't happening.
Right.
And of course, that's on my primary residence. So my wife's like living in a barn. Like, can I move in yet? Like, not quite. Sorry. Love you. It's been fun. She loves it. She's in a great mood. Anyway, all right. Question number 2. Resources. Are there, like, what resources would you recommend? Books, course, website, whatever. Anyone looking to get into real estate or private lending? I know we kind of talked on it before the recording that private lending doesn't have a whole lot of resources out there.
It really-
Curious if you got anything.
It really doesn't. So one of my favorite things is there's a group called the American Association of Private Lenders, AAPL. A lot of their material is geared towards a little bit more of what we consider like institutional, maybe hard money lenders, but they do have a pretty strong subsection that are resources for people that are doing private lending, similar to what I am, just literally individuals lending their own money. They have a conference every year in Vegas in November. It just happened. They are working on getting some online learning modules set up to teach people how to do private lending responsibly, doing underwriting, things like that. So I find that's probably my number one go-to resource. It's like $400 a year for a member to join as an individual, but you can watch they get a newsletter that you can sign up for free. You can watch all their trainings live for free. The replays are for the paid members. So I really think they are a valuable resource for people. There are a couple books out there, nothing I'm really super ecstatic and really, really love, but if you just go on Amazon to do private lending, it'll kind of give you an overview of what the process generally looks like. But a lot of it is honestly just kind of learning on the fly, talking to that's part of the reason I started the group, was just talking to other private lenders and seeing what they do, seeing what's available in their market, seeing what's their usury laws in their state say, what can be done. And a lot of that is really just going to come from, talking to attorneys, talking to other private lenders. Even if you talk to a hard money lender, you can ask them, why do you only lend to an LLC? Why won't you lend to an individual as an individual? Like, oh, well, the usury laws are far easier and higher if I lend to an LLC. If it's an LLC to an LLC, it's a different group of usury laws versus an individual to an individual, much less a non-owner occupied property versus an owner occupied property. So it's one of those things you kind of learn going into the trenches. And that's why I say just finding a community of people that are doing that type of investing is invaluable. There's a couple podcasts out there that have private lending in the title. I don't remember the exact podcast titles, but they do have private lending in the podcast title, that you can kind of listen to those, get a little bit of a brief overview of various options that might be out there, various aspects of private lending. And then there's our Facebook group where every day we have a new discussion point. We have a virtual networking event every month. We have educational series. We were having them weekly until kind of the holiday season rolled around, so we scaled back a little bit, but they're traditionally weekly, where you can come and just learn some new aspect of private lending that we'll just dial into, whether it's underwriting or how to do an ARV appraisal, those types of things, all basically related to private lending or investing passively in real estate.
I love it. Yeah, and your Facebook group
Usury,
is good
by
stuff.
the way. Oh, sorry. Go ahead.
I was just saying her Facebook group is good. So continue.
Usury, for those who don't know, is the practice of unreasonably high interest rates. Usury laws usually mean there's a cap on interest rates. I think it's state by state, but it's usually like 30% or something horrible. It sounds like, I didn't know that you can actually do hired LLCs, but it sounds like you can get around the usury laws.
Some states like New York, for example, it doesn't matter whether it's your own money. If you are lending money to someone else, they require you to get licensing to do so. So I mean, there's lending laws that need to be taken into consideration as far as whether you need to be licensed, and then there's the lending laws as far as what's the limitations, what's allowable. Is deed in lieu of foreclosure allowed in your state, for example, as opposed to, is it a non-judicial foreclosure state? All those various aspects.
Usury, well, they call it usury now, it's high interest rates, but usury, the practice of lending money, is banned in all 3 monotheistic religions. They don't like it at all.
Usury is also very common at car lots right out front of base.
Yes,
Yeah.
It's like,
exactly.
oh, what is the highest interest rate we can get you with? There we go. All right, cool. So where can people get a hold of you if they're not? So for one, I'll just replug Private Lending Lessons is the Facebook group. And if you're interested in private lending, you should definitely go check it out because I like it. And I have poked around and asked a few questions, so I can definitely plug it. But is there another way that you would want people to reach out, or is that the best place to get a hold of you?
I would say that's the best place. I'm on Facebook quite a bit, and so they can join the group. They can send me a message, privately through there. If they're in the group, they'll be able to see who I am, and send me a private message. And I'm happy to jump on a call and talk to people. I had all the educational events that we've had previous are all recorded. So like there's an intro to private lending video that I usually will send people the links to, like, here, watch this 40-minute video. And this is how private lending works from the active investor standpoint. So they can always join the group and then go to the events tab and then just scroll through all the past events. And if there's anything in there that strikes their fancy, the link is right there and they can just do some educating themselves on private lending.
Okay. And then I've got one final question, which I don't normally ask. When are you writing the book on private lending?
I've been asked that a few times. So we're actually working. I've loved your teachable videos because we're actually in the process, me and another private lender are in the process of setting up some private lending learning modules, cool. Basically a course to get some information out there. One course for active investors and how to attract private money lenders and how to talk to private money lenders, what some common terms, flex points would be. And then another one for private lenders to actually, start private lending, because I feel like, I've been asked, they're like, why do you want to teach other people how to do private lending? That's less business for you. And I'm like, no, that's not an abundance mindset at all. That's more business for everyone else, because if less people have to go through the headache of dealing with contractors and, dealing with tenants in the whole 9 yards, if we can be part of a team that, if that suits someone else's fancy and that's their strength, let them do that. Make the tools available to let them do that. That is not my strength. I found that infuriating. So I'm happy doing what I'm doing. You're happy doing what you're doing. And we're both able to make money and not be stressed about it, at least to a certain degree. So I'm definitely of the mindset that the more people that can do private lending, it's helping more people. It's taking money away from Wall Street and putting it on Main Street, as far as I'm concerned. A lot of the people I work with are active duty service members. So I'm helping another active duty service member family on their trip to financial independence, whatever that looks like for them. We're an active duty family. They're an active duty family. I work with a lot of veterans as well. I mean, I feel like it's just a virtuous cycle. You start getting out there, helping other people in your community, that eventually comes back to you.
Like it. Alex, thank you so much for joining us tonight. This has been a really good episode. Actually, both 3 episodes we recorded today have been good episodes, so that's exciting. But this has been awesome. I think there's a lot of really valuable information in here. People are going to get a ton out of it on both sides of the fence, and yeah, I think you're going to get some traction, hopefully, to your Facebook group from this. If nothing else, I'm sure Alex will join, because otherwise, I'm going to tell him he's a crappy person because he wants.
I'm scared. I can't believe I passed due diligence. I have partners. That's the only reason why I get to buy them.
He's like, look at them. Look at their Facebook pages.
Guys, they got their stuff together.
And that's the whole reason why people should partner. They're good at one thing you're not good at. That's exactly a very good point.
Oh man, I love it. Awesome. Well, thank you so much for joining us tonight. This has been great.
Thank you very much for having me. I really enjoyed it.
Thank you for listening to another episode about my journey from military to millionaire. If you liked it, be sure to visit FromMilitaryToMillionaire.com/podcast to subscribe to future podcasts. While you're there, we'd love for you to rate the show, give us a review on iTunes. Now get out there and take action.